Before we jump into this extremely important video, ladies and gentlemen, I have a confession. I have something to tell you. I'm doing a 46K giveaway. We are less than 100 subscribers there. So the entry video is going to be posted extremely soon. So make sure you are subscribed. Click the bell so you will get instantly notified when that entry video goes live. But that's not it. I'm doing a giveaway every 1,000 subscribers. And I'm picking 2 winners per giveaway. So your chances have doubled. 2 winners per giveaway all the way to 50K. Now, let me tell you something. My 40K giveaway, I gave over $1,000 of silver away to 5 different people. So imagine how big my 50K giveaway is going to be. Click the subscribe button. Make sure you click the bell so you get instantly notified for all of these giveaways that are going to be posted over the next several months. With that said, let's jump in the video. Hey, what's up everyone? This is Silver Slayer. Welcome to my 5 p.m. video. Next video drops at 10 p.m. So make sure you tune in. What if I told you that I could prove, that I could guarantee that silver prices will be dramatically higher over the next several months, years, and decades? That's what this video is going to talk about. The link to these 2 articles will be in the description. Let's jump straight into it. So gold, silver, and the US dollar. There are many drivers of precious metals prices, such as global economic growth, supply and demand, inflation expectations, interest rates, geopolitical turmoil, etc. However, one of the primary influences on the price of gold and silver that investors must always keep their eye on are the movements in global currency markets, and especially the US dollar. There is a direct correlation between gold and silver prices and the dollar index. When the dollar index is low, gold and silver is high, and vice versa. Well, ladies and gentlemen, we have an article that was published yesterday talking about inflation and how it's hiding in plain sight. We're talking about trillions upon trillions upon trillions of more money, not talking about the previous trillions of dollars that are going to be thrown into play, and what that's going to do to the US dollar. This is going to be a very important video to stay tuned into. Make sure you watch till the end. We have a lot of stuff to talk about, a lot of stuff to prove, and just a lot of information you can't overlook. When people are trying to debate precious metals, they don't talk about this stuff. They're going to talk about how silver's price has averaged $15 over the last decade. They're not going to talk about anything that's about to happen. Investors make strategic decisions based off information, and this information is pointing towards higher silver prices. Gamblers speculate, assume, throw money, and hope it sticks with the odds against them. Well, the odds are in our favor, folks. Let's go. Looming inflation, and it's also hiding in plain sight. So we just covered how the dollar is directly correlated to gold and silver, and then we have this article. I'm going to be switching between articles, highlighting the main points. I never like to talk about stuff you don't need to know. So there's no doubt that the US government has printed an unprecedented amount of money since 2009. More than 10 trillion, with a probable 6 trillion more on the way. Now it's interesting that they say 2009 because what happened 2 years later? $50 silver. 2008 credit/financial crisis, recession/depression, billion-dollar stimulus back then, which led to $50 silver. Nowadays, financial credit crisis, recession/depression, trillions of dollars. A trillion is a much bigger number than a billion. So if billions in stimulus led silver to $50, imagine what trillions and trillions of dollars is going to do to silver prices. Plus, we have a situation, if you know what I mean, COVID, and the astronomical demand of silver needed over the next several decades with this Green New Deal. Things are a lot more extreme. So if you want to talk about $100 silver, that's nothing. If you want to talk about crazy silver prices, we're living in crazy times. So anyways, Soak this in, folks. New money printing now exceeds the total cost of our most expensive wars. The money supply has increased 250%, but inflation has remained low. Economists explain this phenomenon is due to extremely low velocity. In other words, the money is just sitting in bank vaults going nowhere. That's somewhat true, but most of that money actually went into the stocks and bond markets. And this great wealth is divided in creating this money illusion, this hallucination that stocks and bonds have actually become tremendously more valuable. Stocks have become 300% more, quote unquote, valuable in the past decade. This is hidden inflation. We've had serious inflation, but don't know it because there's a barometer that we use to measure inflation that's missing: security price inflation. Consumer Price Index, which is also the CPI, measures increases in the price of goods, services, but that's not where the money went until recently. We are beginning to see inflation in CPI because some of the 5.2 trillion of this relief plan went directly to consumers, and we'll be seeing more. Now, you can see the money supply has more than tripled, and this it went from 6 to 20 trillion. And this chart just shows from 2009 to 2021 what's happening. It's only going to get more interesting. If you think that recovery is a realistic word that they're going to use, that's non-existent. You're going to be sadly mistaken. The FOMC meeting, Federal Chairman Jerome Powell exposed the truth. The first FOMC meeting, they gave false hope. And then a couple days later, Jerome came out and said, hold up. You know what? It sounds good, but that's a little exaggerated. And I'm glad that he made that article because there was a lot of speculation after that first FOMC meeting, and prices of gold and silver shot down because people had false hope. Now, anyways, so how the US dollar affects gold and silver prices. The US dollar is the base currency for both gold and silver. This means in the global commodity markets, gold and silver are generally bought using US dollars. Therefore, if the dollar weakens, gold and silver becomes cheaper to purchase and the metal prices generally increase. Whereas if the US dollar strengthens, it becomes more expensive for investors to buy gold and silver. On an average, precious metal prices will drop. So we are literally looking at a direct correlation, and if the dollar index is strong, gold and silver is low. Do you really think the dollar index is going to stay strong when we have tens of trillions of dollars that haven't even been thrown out yet after trillions upon trillions already have? The dollar's lost 98% of its purchasing power. Do you think it's ever going to get better? No, it's going to go to 99% and then 100%. Every fiat-based system throughout history of man has always failed. This one is going to fail too. It's designed to fail. So while this partially explains the negative correlation between gold and silver and the US dollar, there is more to make of it. The key driver behind the value of the US dollar is the level of US benchmark interest rate established by the Federal Reserve. This is because the more interest one receives for holding US dollars, a greater number of people will be exchanging their money into US dollars. Therefore, a rise in US benchmark interest rates, or an indication that a rate hike is near, historically strengthens the US dollar. This in turn will weaken gold and silver, not only because it becomes more expensive to buy precious metals, but also due to the opportunity cost of owning a non-interest rate or a non-interest bearing asset. If holding the US dollar pays you reasonable interest, then holding precious metals becomes less attractive as they obviously pay no interest. Gold becomes stronger as US dollar weakens. And anytime we're talking about gold, we're talking about silver as well, right? Silver is gold on steroids. Silver is a more dramatic, more exaggerated version of gold. It's more volatile. But that's also that it can be dangerous because it can work both ways. If gold's going to rise 5%, silver's going to rise 10%, but it also works the other way. If gold's going to drop 5%, silver's going to drop 10%. And that's solely because silver is a much smaller market than gold. So when money goes in or money comes out, it affects silver to a greater degree. So gold became an increasingly attractive option to emerging markets and central banks and individuals, as well as due to its strong performance in 2016 to date. Furthermore, countries suffering with high inflation tends to buy gold as an inflation hedge. Since gold is liquid and frequently traded, it is often viewed as an alternative currency. And I actually just made a video yesterday talking about how silver is starting to become a currency again too, and why banks actually need silver. Check that video out. So since gold is liquid and frequently traded, it's viewed as an alternative currency. Silver is liquid, frequently traded, and also demand is going to be high. There's also a direct correlation for people who hold silver. When silver demand is high, but people aren't selling, it also pushes the price up. We know that investors like you and I aren't selling anytime soon. The demand for these 5G towers, electric vehicles, that demand isn't going to be, stopping anytime soon. So that's another reason why we can expect precious metals prices to be higher. For developing countries with volatile currencies, gold has become a popular investment with central banks, especially in times of US dollar weakness. Right? The only reason America is the richest country is because we own the most gold. So investors realize that this massive money printing is inflationary, so they are protecting themselves, as they should. Crypto wouldn't even exist if investors were not afraid of currency debasement. Precious metals, especially gold, are a popular inflation hedge. Real estate is another historically good inflation hedge. But there's problems with crypto and real estate. Crypto and precious metals are the only two investments where you are in complete control of your wealth. You take the money, you take the power away from them, and you are in complete control. But precious metals takes it a step further because it's tangible. If you can't hold it, you don't own it. You can't hold a Bitcoin in your hand. You can hold your laptop that holds the Bitcoin, but if there's a power outage or whatever the case is, you can't access it. The only way gold and silver is going to be taken from you is if someone kicks down your front door. Some people fear that. Some people love that. Stocks can also be an inflation hedge, but it's pegged to US dollars. That's like switching seats with the Titanic. If the dollar crashes or if the fiat system fails, what do you think stocks are going to do? Increasing interest rates reduce stock prices because future earnings are discounted at a higher rate, so those earnings become worthless. In this case, the Federal Reserve is implementing a zero interest rate policy. So investors are confident in inflation protection from stocks for now. Some new monies are being directed to manipulate the bond market, but investors are not fooled by money illusion there. They know bonds are not worth their current price, and since the price is being manipulated and high. There's also something else that is taken from this. The USD is the world's reserve currency, right? Every country in the world relies on the dollar's strength. The dollar is only as strong as people think it is. So if people, quote unquote, think the dollar isn't strong, it's literally not strong. Countries after this COVID thing have been exposed to how broke the United States really is. You see some countries already opting out of the USD, some countries switching solely to cryptocurrency, and it's rightfully so. We've had serious inflation, but it's been hiding in the prices of securities that investors expect to protect against inflation. Inflation is in plain view. Inflation protects securities, especially stocks. So here's an ironic situation. Inflation fears fuel money illusions. So Venezuela's stock market teaches a lesson. In 2016, the stock market in Venezuela performed best in the world, earning 114% versus 13% on the Dow. Even though its economy was in shambles and it was suffering hyperinflation, this event has direct application to the recent U.S. stock market. Lots of cheap paper money was frantically searching for some place to go. Like Venezuela, U.S. investors will eventually come to realize they've been fooled in a couple ways, right? So interest rates are obviously the key, but here's the conclusion. Following the roaring 2010s, which you know what happened then, This decade is loaded with a host of investment threats that can destroy lifestyles, especially for baby boomers. Most of our 78 million baby boomers will spend much of this decade in the risk zone, spanning the 5-10 years before and after retirement. They may not recover from the next market correction. And here's the thing, when the market's correct, it's actually correct. Markets are supposed to correct. They're supposed to have sell-offs. They're supposed to have dips. It's actually healthy. For silver to go higher, it actually has to go down. If it just went up, 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 the price would crash, crash, crash. We need it to go down a little bit, up a little more, and then it starts building stability at these higher prices. If it just went to $50 tomorrow, there would be no stability, no foundation at $35, $40, or $50. So then when it is sold off, it would go right back down to the previous price. Look at Bitcoin in 2017. It went straight up to $18,000 without any type of corrections or any type of stable pricing. So then it dropped, and it took years for it to recover. We need it to slowly go up. Anyways, I'm going to wrap this video up here. If this doesn't show a great point or blatantly obvious information that gold and silver are a ticking time bomb, especially silver, waiting to blow, then I don't know what will. The numbers don't lie, charts don't lie, history doesn't lie, and this information is literally pointing towards higher silver prices. You can't argue what the dollar index means for gold and silver, or what happens when the dollar index is lower. You can't argue that. You just can't. But that's only one of the several reasons why silver has potential. Remember that as well. Anyways, make sure you are subscribed. Turn on the bell so you instantly get notified when this giveaway video gets posted, or the entry video. You don't want to miss out. Check out my next video at 10 p.m. Eastern Standard. My upload schedule is 10 a.m., 5 p.m., and 10 p.m. every day. So make sure you tune in. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.